A rather fragile move, if you like, to the upside?
If we have a look at sector performance, it tells a lot about where investors' psyche is and where the market's at. And if we have a look at sector by sector, the areas which really outperformed today were those high-yielding areas. We saw Telstra up by 1.3%, the banks up by 0.9 to 1.7%. And if we have a look at the underperformance, it was really the industrials and the material sector. We saw the IMF coming out to downgrade just slightly global growth expectations for 2012 to 3.5% from 3.6% previously. It is behind the curve. It did downgrade China by 0.2% down to 8%. We know that China's aiming for 7.5% growth this year, so it is a late move. But all in all, if we have a look at the Aussie market, today was all about the banks. We did see the banks really outperforming in the market, and overnight during the US session, that was helped along by Citigroup's result, which came out above expectations. Earnings per share came in at $1 and the market's expectations were 89 cents. So that really helped the rally in the banks today. But once again, poor volumes, only $3.3 billion worth of stock being traded. If we have a look at where we are in terms of technicals for the Australian market, this is just a chart of the Australian market since mid-May, so around about the last few months. And what you can really see on the Aussie market is that we have been moving sideways. On the downside, if I just draw a line, we've been bounded around that 4,000 mark, which every time we've come to that level, we've seen quite a bit of buying power. And then on the upside, it's around about where we are heading up to now. 4,160 points does seem to be quite a strong resistance area. The RSI moving very closely to that overbought area, so I guess a bit of caution at these levels, seeing that we have been bouncing around these levels since mid-May and we are getting to the upper end of that resistance line. So of course, if we break through 4,160 points convincingly, that would be a very bullish signal.
Yeah, safe bet a lot of people do, and one of the attractive destinations on our market. There are a lot of people who suggest, look, the NBN deal is great, but maybe it's not all that long term, and and how sustainable is that? Are there going to be special dividends? That there are still, I suppose, a few question marks around the stock.
We've seen a fantastic ride for Telstra, and it's over the last couple of years where we have seen the Australian market performing negatively, and this is really an area which shines when the market is undergoing either a sideways movement or a down movement, and that's really what we've seen over the last couple of years. So as long as we see this focus and this concern around Europe, China and the US, these defensive areas are going to do well. If we have a look at Telstra at the moment, we're coming up to a dividend, so even people buying in now, a 13-month dividend yield, you're seeing 3 dividend payments as well as the franking credits attached to it. So if you don't have a look at the yield over 12 months and instead have a look at it over the 13-month period, it still looks like an attractive proposition. Most brokers have a target of around about $4. So once the stock hits $4, you'd be looking at it as a pure yield play rather than a growth play as well. But that dividend yield is still quite attractive. At these levels, a little bit of growth, but starting to look fully priced in terms of growth, but that dividend yield is still very attractive.
Been talking up Woodside, and it has disappointed for a long time now.
Woodside is probably the peak in that energy space. I'd be staying away from some of the more unconventional energy players, only because the cost of extraction there may be an issue going in the future. But Woodside Petroleum, fantastic portfolio of assets. The share price around about BHP's share price now. So we are seeing quite a bit of value in those miners, not only in the oil and gas space, but also in the material space, as long as we don't see the commodity prices dropping any further. And I guess that's the key there.
Indeed. Look, got to leave it there.